Interest rates and lending can be a confusing topic, even for a seasoned real estate veteran. The recent cuts by the Federal Reserve, along with rapid changes on mortgage rates over the last 2 weeks, have only complicated things. Hello, I'm Alejandro with Alejandro Ventura Real Estate at Keller Williams. And in this video, I'd like to share some thoughts to help you make sense of what's going on with interest rates. First, it's important to know that there is not a one-to-one correspondence between the Federal Reserve prime rate and mortgage rates. Mortgage interest rates are determined by a number of factors that include inflation, economic growth, the Federal Reserve policies, and the housing and bond markets. When the Federal Reserve cut the prime rate between 0 and 0.25% recently, many people thought that they could get interest-free mortgages, and that's not the case. In fact, mortgage rates actually increased after the prime rate cut. And as to what we can expect with mortgage rates going forward, at this point, it's anyone's guess. Freddie Mac has provided this helpful summary of what's happening with rates, showing that they have increased by 0.7 of a point over the course of just 1 week. And although that is a big change, it is important to remember that rates are still near historic lows. And in fact, the 30-year fixed rate is still lower than what it was last year at this time. Low rates are good news for the real estate market. If you're buying, the benefit is obvious. The cost of borrowing is low, which saves you a ton over the life of the loan. And if you're a seller, low rates are good because they encourage buyers to make offers on your home. And even if you're not selling, a healthy market is still good news for the equity you are building as a homeowner. I'm Alejandro with Alejandro Ventura Real Estate, and make it a great day.